Studying the top 100 firms' growth patterns over the past 3 years can be rather telling. Once you factor out the impact of major mergers such as the Dixon Hughes Goodman, Clifton Larson Allen, Cohen Resnick, and Plant Moran Blackman Callett combinations, top quartile growers expanded at a rate of nearly 13% over the past few years, whereas the bottom quartile firms averaged just about 2.5% over that same time frame. Now, one great aspect of you being CPAs is you understand principles like the rule of 72, and thus how these bottom quartile firms are speeding down the highway of irrelevance compared to their peers in the top quartile. Subnormal growth creates a number of other headaches as well, just besides irrelevance, including things like the inability to add new partners. In fact, these bottom quartile growers have in fact largely cut partners over that 3-year time frame. Furthermore, there are challenges such as net income per partner pressures, the lack of desire and or ability to invest in new products or services, constraints on funding retirement-related payouts, and then finally, potential roadblocks to remaining an independent firm. In short, it can bring about a death spiral. Now, we've talked about a couple of ways to grow your firm previously: mergers and innovation. So besides inflationary or market fee increases, there are largely 4 key ways to bolster your firm's top line. We call it the E4 growth method. The E4 growth method, as the name implies, has your firm focusing on 4 different elements: essential clients, expansion clients, emerging issues, and then finally external growth opportunities. Firing on all 4 cylinders of this can have a tremendous impact on your firm. Let's take a look at what each of these mean. First, essential clients are the anchor clients, so to speak, of your firm or office, the ones that you'll shed some real tears over to the extent they leave. They are also the same clients that your most hated competitors are plotting out how to steal right now. Having set plans to assure that they are the greatest raving fans of your firm are essential. Obviously, client losses occur from time to time in the accounting business, but making sure that these are not among them is critical. Again, the second bucket involves expansion clients. Most partners in your firm or office are likely to have a half dozen or so of these expansion clients. These are excellent clients too, but for whatever reason are not availing one or more of your firm's valuable services. The reasons behind it, well, sometimes it can be a partner that's just extra busy, or maybe a partner that's a gatekeeper. Rooting out these opportunities either by industry teams or by functional teams such as tax or audit may be a great way of culling out different opportunities. The third bucket of opportunities involves what I call emerging issues. These are regulatory agency changes or accounting body rule modifications that apply to a broad swath of your clientele. A current example here in the summer of 2014 includes the Treasury Department's new repair regulations. Most firms fail to approach implementation of these emerging issue developments in a strategic manner, often losing out on multi-million-dollar opportunities to grow, as well as simultaneously creating practice risks. The final bucket in this E4 methodology involves external client opportunities. This is somewhat self-explanatory in terms of what it is, and the methodology will be discussed further in our sales training and processes video. Again, firing out on all cylinders with all segments of the E4 growth method can obviously have a huge impact. Please contact us at CPA Growth Partners for an initial cost-free discussion.